Good afternoon, everybody. It's on the dot 12 o'clock, and people are joining. They'll still be joining in the next minute or so, but while they're coming in, welcome to everyone on the call. Welcome to our guest speakers. I'll introduce them just now. Today is our second in conversation with, and our topic is insurance lessons learned from COVID, riots, and floods. It's going to be very interesting. There's a lot of unfortunately, there's been so many events in South Africa, so we'll see what this is about. I can't wait. Now, as you know, Fluid Rock is a leading independent corporate governance firm in South Africa, Africa, and the world soon. We've got the Academy as our one division, which is hosting us. So thanks so much to Letitia and the team for organizing everything. We've got a company secretary team where we are the COSEC, or we help with COSEC matters and meeting management. We've got an advisory team, a statutory team, and then recruitment and placements for non-executive directors and company secretaries. So if you have an idea to become a non-executive director, let us know and we'll put you in touch with Monica. And then, of course, we've got our compliance, risk and ethics team. At the moment, they're running quite a good kind of campaign to check people, to help companies check their compliance maturity and risk maturity. So we are 80 team members. We are 80% female, and that's why it's very nice for me, especially to have some, to have some men in the room for a change. And it's a team from Hertzberg Salant. The format of today's session will really be, for me, I'll introduce and hand over to the team just now. They will create some context for us. And in the meantime, please pop any comments, questions, observations in the chat or in the QA. Elena, if you can just make sure that's open for everyone. And then we will, because we really want this to be a conversation, it's a discussion, it's really a facilitation. If you've got any questions, anything where you are worried about or concerned about, or you just have a question, please pop them to us. So please allow me to introduce Michael. Michael has been a good friend of mine and a colleague for a long time. He's been looking after us before he joined the law firm. And Michael was admitted as an attorney in 1987. You shouldn't give away, that doesn't give away anything. And he's had so many amazing positions, both locally, internationally, in a brokerage firm fulfilling his role for African operations. And he was contributing to the committee of the Financial Intermediaries Association. He was a chairperson of the South African Insurance and Investment Standards Generating Body, and the company representative of the Institution of Risk Management of South Africa. Michael has been consulted on legal matters, particularly within the short-term insurance industry. Michael is, on a personal note, he's fascinated with different breeds of dogs, their personalities, and the roles that we have created for them and how they manage to tolerate us. Okay, if you have some background noise, I've got some 2 Scottish Terriers in the room, so I'd like to get them understand. So Brad has been involved in forensic space for over 10 years. He has conducted investigations into sensitive matters in both the public and private. Is that the Guptas? Are those the Guptas? Okay. And before becoming involved in the insurance industry, his experience in forensic investigation gives him a very unique focus on the details and insights required for insurance claim investigation. I'm sure you've seen some stuff, and I'd love to get some gory stories from you today, Brad. So Brad enjoys, on a personal note, enjoys watching and playing sports. And I said, despite his career choice, he actually managed to get married. And more importantly, he has 3 kids. And like I said, they tolerate spending time with him. It's just a joke. So, and Gary has his BCom from WITS and an honors in accounting science from UNISA. And then he became a CA. I always joke, I say my future ex-husband is a CA. I just want to, see how that goes. And then
future ex-husband.
Yes. And then he articled from GT, from Grant Thornton, Cape Town, and then he went into commercial. He has got various roles in finance, and especially with formulating and assessing claims. And he's an avid runner. I always wonder what runners run from. Like, what are you running from? And then someone said, no, I'm running to something. But they run in a circle, right? So, okay, so Gary. And then you'll see him pounding the streets of Joburg, so just wave and maybe buy him a cup of coffee on the way, because he loves coffee. He's a coffee aficionado. I don't even know how to say that properly, but me too. I'm also one of those. So team, thanks so much. We really, all of us struggle with insurance, especially if a claim is hit and we don't know what to do from there, or if it's not been granted, and you've seen everything. And so Michael, over to you, if you can please take it further.
Right. Well, thank you very much. Firstly, for giving up your time. We know that people live in very, very busy times now. There's huge amount of stress. We also know that people need to educate themselves in areas where they are exposed. It's one of the areas on risk. So we can't focus too much on the importance of risk management and what you should be doing to deal with it, to cater for these issues. We really want to drum home how important it is that when one actually establishes any insurance portfolio, that it always makes sense to start from a sound risk management program. It'll help you in understanding what is insurable, what is not, what can be insured, what can't be. And as we get later into the conversation, you'll see how important it is to determine what you would be doing in the event of a disaster. Have you got a disaster recovery program? Have you considered all the factors as to what could go wrong? So we're going to be talking a little bit about that. We've kept the conversation as broad as possible, but we're focusing on these issues because of the barrage of catastrophes that has hit the economy. You know, many of these are global. We also understand that with climate change, with actuaries previously, you know, working with the insurance company and giving them information as to how often you're going to have a catastrophe. Hailstorms are happening, were happening once every 7 years. When we're looking at regional disasters, the gap in years was much, much greater than it is now. And over the years I've been in insurance, I mean, I've seen it changing radically. We also need to understand that the insurance market is controlled by reinsurers. And these reinsurers are global reinsurers. They give insurance to the insurance companies, and they will prescribe that which you should be doing, that which cover you can be doing. So we're working within that particular environment. I don't want to give you a huge lecture on the technical issues, but we need to walk away understanding how important it is getting an adequate policy in place, ensuring that your sums insured are correctly calculated, how to prepare and present a claim, because if you don't do the preparation and presentation correctly, you're going to be prejudiced. We're going to talk a little bit about the role of the loss adjuster in assessing the claims, how you should be working with your brokers, how to prepare, and essentially what went wrong, what didn't, what we can learn, how we can actually change in anticipation of the next issue. And we really welcome any questions because we're talking broadly, and we're also going to be talking from our professional experience after having dealt with a huge amount of riot claims. We've dealt with hundreds and hundreds of riot claims. We sort of looked at the biggest in the country, what went right, what went wrong there. We also are going to be dealing with the flood claims. We're going to be focusing on what we believe is a particularly an area that is not well understood, whether it's, quite honestly, whether it's insurance companies or brokers or people in the market, and that's business interruption. Trying to establish what you have lost following an incident, how much you've lost, presenting it, convincing the insurance company that you're covered, and then ultimately getting the claim settled optimally. That is really what the point is of this discussion. There is a huge amount of expectation that as soon as a matter occurs, the loss will be settled and my broker will handle it. But we want to actually talk about processes, procedures, what one should do to safeguard their company. I know a few of you have got, or in fact, each and every one of you have got extremely responsible positions, whether it's in terms of your risk functions, the position of your companies. You know, this is absolutely key. As is mentioned, we will take questions as and when. But if we can go to the next slide and we can talk about actual issues that we've actually confronted and dealt with. As was mentioned,
I think we've lost.
Is constituted of financial experts. We don't believe that you can be a legal firm and only focus on the legal principles without understanding the intricacies of the financial issues. Sorry, did I hear something there, Renelle?
No, Michael, we just lost your sound for a second. Please continue.
Okay, so what I'm actually saying is with the combination, so I am going to actually hand over to Brad now, just to talk about some of the experiences that they had with the claims that they've been entertaining. Brad, do you want to take over?
Thanks, Michael. Hello, everybody. I think as a starting point where I'd like to just go, particularly with business interruption claims, is that when it comes to other claims besides business interruption, so the insured's filling out a claim form, and the brokers and the insurance companies give them the exact details that they need to give in order to prove their claim. When it comes to business interruption, this is not so much the case. So what's happening in practice is that the insurance company, they appoint a loss adjuster in order to assess the claim. And I think the key word that I'm going to use here is to assess the claim. What's happening is in practice is that the insureds are not formulating a claim. They're asking the loss adjuster what information, we don't know how to put in a claim, what do we need? They get sent a list of information and they send through all the financial information to the loss adjuster, who's in fact formulating the claim. And that's really the first problem that we find in, is that the loss adjuster who is appointed by the insurance company is looking at the information provided on whatever information he gets. And there's very little input from the insured themselves. And that's the tragedy, because the insured themselves, nobody knows their business better than you do. And there seems to be, and this is what we found, that I don't understand business interruption. I'm paying a premium, just pay me my claim, please. They provide whatever information is sent to the insurance company, but without understanding why that information is needed by the insurance company. And therefore, in many of the cases, and we're going to give you some examples as to why it's so important to understand why you're given the information, why the insurance company need it, and what they're going to do with that information. So,
Brad, can I come in for a minute here just to clarify one issue and to highlight? In every, is that okay, firstly?
Yeah, please do.
In every time an insured has a claim, the burden lies on him to demonstrate that his claim falls within the ambit of the policy wording, number one. Number two, he's got to show what quantum was actually suffered. If any exclusions are raised by the insurance company, to them to satisfy them on a balance of probabilities why that exception doesn't apply. So he does have a burden to properly present his claim, because it's the way and manner that he actually presents it will be the basis on which all decisions will be taken. Thanks, Brad. Carry on.
Yeah, absolutely, Michael. That's a point well made. So what does the insurer do? They get a letter from the insurance company that say, please provide us with the following information, 1, 2, 3, 4, 5, and 6. So the first thing they often do, well, they phone the accountants. You're the accountants, you're the financial guys, please help us put together our claim for us. The problem is that the accountants also don't have a good grasp of what is included in a business interruption policy. And I mean, Gary Menachemson, who's part of our panel, I mean, he was the financial manager of a company for many, many years. I know before joining our team, he just wouldn't know the intricacies of the business interruption claim and what needs to go in. So I think there's a lot of reliance on the accountants. Some of them may know if they've had insurance experience. However, there is a big difference, between the definitions of what an accountant sees gross profit as opposed to what's actually included in the cover. Michael, maybe I can just hand over to you on that point as to what the definition of gross profit from an insurance point of view is.
I'm going to express that what I'm going to tell you is going to apply in all these business interruption policies. There is almost a global standard as to how policies are written. The extensions might be a little bit different, but you could be covering a number of things. You could be covering revenue, you could be covering rental, you could be covering gross profit. The definitions set out in the policy as to how you arrive at gross profits. There are two different bases. I don't want to bore you right now or try and lecture you as to how to arrive at that particular figure. But simply spoken, if I were to tell you that your gross profit is based on one of the different bases is an additions basis, and it's easier to understand if I mention to you, it's really essentially your standing charges plus your net profit would constitute the gross profit. That is the easier way to look at it. People always say, well, go for the difference basis. There are advantages. I can explain everything to you on a one-on-one basis if you like, but I don't want to go into the intricacies right now. Firstly, it's going to bore you all to tears because sometimes I actually fall asleep when I lecture. But ultimately, it is exceptionally important that you get your gross profit figure right. And I'm going to, if you don't mind, Brad, I'm going to just continue as to why it's so important. We are going to be talking about the application of average. We are going to be talking about that a little bit later. Do you want to go to the previous slide? Sorry, I think it was a little premature to go here. But essentially, we're going to look at what extensions you actually have. If something goes wrong, what happens if your premises yourselves are not damaged, but you're reliant on a particular supplier or a particular customer, but he has a flood in his region, your business is affected. Your access to premises are impacted. Utilities go. It could be your public utilities. It could be telecommunications. It could be any range of suppliers to you impacting on your business. But get your sum insured correct. Your broker should be able to assist you with it. But my experience tells me that I think it's 99.978% of brokers don't fully understand. And I am throwing you just a random figure, but our example just is evident that brokers don't really understand full well how this profits extract should be given. They will give you a formula in which to arrive at it. Please follow that formula. Assume your claim occurs on the last day of insurance. Watch out how you determine your indemnity period, how long you could be out for. You would have to look at, well, my indemnity period, I'll probably rebuild in 6 months. I'm going to choose an indemnity period of 6 months. Now, I'm going to explain very briefly what an indemnity period is. The indemnity period that you choose is absolutely crucial in determining the cover you have. It will establish the period that will take for you to recapture your markets once your premises have been rebuilt. If you're a landlord, it's not a case of just rebuilding and waiting for tenants. It's a case of, yes, you will rebuild, and you had tenants before, your rentals were so much prior to the loss. There are ways to actually establish this. What is how long will it actually take to recapture all those tenants who've run away? You might have machinery that is very, very difficult to source all over the world. Establish that before you actually determine your indemnity period. Think that when there are regional claims, let's say they're massive claims as we saw with the rioting or the flooding, you must take cognizance of the fact that loss adjusters aren't even out there to assess your claims. There's a shortage of them. There's a shortage of roof suppliers or contractors. They're busy fixing up an area. Assume the worst. Understand what you need. The amounts of extra premium you'll pay in getting both your sum insured correct and your indemnity period will serve you really well in the event of a claim. I am going to, there are areas that I put a couple of points, like what is additional increase in cost of working versus increase in cost of working? When can you actually claim? I'm not going to raise that right now, but we'll give you real examples. And Brad, if I can handle to you and Gary to take us through the examples.
Yeah, perfect. Thanks, Michael. I just want to carry on where I ended off. So really, what we're saying is the point of the loss adjuster is not to formulate the claim. It's really to assess the claim. And it's so important for the insured when preparing the claim to understand what information he is given and why it's necessary. And I'm going to talk a little about the brokers, and I love the brokers. They're our biggest source of business. I mean, we love them to bits, and I'm not putting them down in any way. But when it comes to business interruption, and they will admit this, they don't understand the intricacies of business interruption, and they also don't, in many cases, understand why the insurance companies are requesting the financial information that they do request. So I think the point is really be involved. Nobody knows your business like you know your business. Understand why the insurance company is asking for that information, and we're going to explain a little bit as we go on. But please just don't rely on the insurance company and the loss adjuster to formulate your claim. Please understand why they want the information and go to someone who understands business interruption to guide you as to giving the not only the information, but why you're giving it. And we're going to explain a little bit further why. Another point I also just want to raise is that a lot of the claims handlers, and the loss adjusters, it doesn't help them by just throwing the information at them. If you give them a nicely formulated claim that's well understood, it also speeds up the whole insurance process. So I really think the point I'm just stressing, and just to end off on this point, is how important it is just to put in a good claim. Don't rely on anybody else to formulate the claim for you. And let me give you reasons.
Can I just add something there?
Please go.
So just to reiterate that point, when they send it, when the insured sends through that information, they often, it becomes a loss adjuster's job to analyze it and determine what's going on. And I find often when you're trying to ask questions and delve deeper into that information, the brokers and the insured aren't always engaged. So the information that they provide isn't always useful in you determining how their business operates, and it does end up causing problems when you're trying to analyze that information.
Brad, can I also ask a question? I was at a voice clinic, and they said if a woman's voice go high, men are naturally inclined to stop listening. So I think what we all have happened to us is if we hear the word insurance, we are all naturally tuned to go like, oh, this is not my baby. I don't want to deal with this. And this message that you are reiterating is take control of your insurance from the moment that you get the cover to the claim to make sure am I hearing, is that right? And then does that result in more successful claims?
100%, Ronelle. And as we take you through what goes into a business interruption claim, I think that will be understood more. But 100%, your point, that's exactly what we're trying to bring across.
Yeah, and I think what I'm seeing, and in my experience, and I'm going to take you back to corporate days, We used to have this renewal with clients. All they wanted is, how much we paying? Have we got the same cover as we had last year? Let's go for lunch. You know, it was really, we didn't have that attention to the detail. People weren't probing enough. It is very, very much, insurance has always been a relationships game. But the fact is that we're dealing with contracts, and you've got to operate within the contract, having a full understanding of what your obligations are. What are the terms and conditions? What are the warranties of the policy? Are you actually complying with all of these? You know, I was going to talk a little bit about cyber as well, but I'm just going to throw you some examples with cyber insurance. Critical, biggest probably talking point in the country and probably globally in terms of risk is cyber risk. Absolutely huge, but the massive conditions that one needs to comply with in terms of security, what needs to be done in the event of a claim, when to notify, how not to prejudice insurance companies, etc. So my advice always is understand, you know the terms and conditions of your policy, and immediately any claim occurs, phone your broker, have them take you through what is required to be done, what information you need to prove it. And it is absolutely key. Another thing was COVID. We did say we're going to talk a little bit about COVID as well. So I'm just going to mention it right now. The concept of business interruption equally applies across COVID, flooding, and SASRIA. You know, in fact, across all aspects of your insurance. The difference with COVID type business interruption and the normal one we get is the COVID wasn't dependent on physical damage to property, like a flood, like a fire, like hail damage, whatever it might be. It is one policy that is not dependent on it. You might also get policies where you've got a breakdown of supply of public utilities and you haven't suffered a material damage. Insurance companies are now changing their policy wordings. They're removing certain extensions that you have. Be aware of the changes that are made. Understand how they impact on you. Determine whether you can get these covers elsewhere. With COVID, by the way, I'm just going to make a statement right now. You're not going to get pandemic cover. You know, I know the question will probably come, can we get it? I cannot see where you can get it, certainly not locally. I haven't heard of it anywhere globally as well. But that's another issue that we can talk about. Can I hand it back to you guys?
Yeah, thanks, Michael. So the question now really is, where were things going wrong? What have we seen? What are we finding wrong, particularly in business interruption? And let me start off with something called trend analysis. What's the intention of business interruption would be the first question. And the intention really is to put the insured in the same financial position as they would have been if not for the incident. And therefore, the starting point is to look at what turnover the insured would have made if not for the incident. So how's this done? So the insurance companies will generally ask for management accounts and your latest financial statements. And very often what's done is they look at the annual financial statements, they look at your turnover on an annual basis from your last financial year to the previous financial year, and they say, right, the business is growing X amount percent or going down X amount percent, and using that trend in their calculation of business interruption. Now, there's various problems with that. One of them, Michael just mentioned COVID. So when we were looking at some of the flood claims, and we still are, there were big floods in KZN. The insureds were sending through their financial information, and we were looking at the financial information. The what's so important to look is that were there any historical issues that happened within the company? For example, COVID. One can't just look at the previous financial year against the one before that, because COVID had a big factor in there. There were so many insureds that were out. In fact, an example, there was a restaurant in Cape Town. They were closed as a result of COVID for about 2 months, So obviously their turnover was going to be down in the latest financial statements. So these are areas that need to be looked at. What happens very often is the insurance companies and the loss adjusters, they're using generic calculators. So they just plug in these figures, but it's not understood. The business is not understood. What type of business, what type of industry, what are the trends in that industry? These are things that can be taken into account, and so important to take these into account.
So what Brad is actually ultimately saying is, don't just provide the figures and let the loss adjuster do the adjustments. Another thing is, once he's actually prepared his report and it's gone to insurers, it's very difficult to undo that which is already done. So you want to work with the adjuster all the time in presenting the correct, the factual loss. You can't get enriched by insurance, but on the other side, as Brad mentioned, it's a policy of indemnity. You should be placed in that position, not where you were last year, but rather where you would have been but for this incident.
So Michael and team, John is asking, are you suggesting that the insured needs to motivate for adjusted numbers versus actual?
Absolutely. And I'm going to pass on to Brad as to how we do it in practice.
Yeah, John, absolutely. I think firstly what we're saying for is, what is the anticipated turnover that you would have made if not for the incident? And there are many factors that are involved there. So don't just look at the historical records and say, right, our business is growing X% year on year, therefore that's our growth. In fact, it's so important to even look at your current financial situation. For example, we saw a claim, there was a tire and fitment center that was affected by a flood claim. When we looked at the historical record, the business wasn't doing very well. But in the interim, and currently what they were doing is they began offering roadside assistance and fitments. So they would actually drive out 2 flat tires, they would change the tire when it happened, and their business grew massively. So these are things that need to be taken into account. Going forward, they say in those months, this new business venture would have certainly should be taken into account. So don't just look at historical figures. Other areas which
just to add to that, so if you don't take that into account, the growth of the business, when you compare your standard turnover to your actual turnover, as an assessor, you might determine that there is no loss in turnover, because you're using the historical figures which have not been adjusted up to take into account the adjustment in business. So that can negatively affect your claim by not providing that kind of background information on the business.
Yes. So if I can, with my corporate governance hat on, every business should check if they're solvent and liquid at any point in time. And to support that, you take your balance sheet and then you need a 12-month rolling cash flow forecast. Oh, sorry. I think, Michael, the connectivity is a bit strange. But I mean, basically, so you would have that in place if you're following some level of corporate governance on a financial perspective. And that would probably help, right, Brad?
Yeah, absolutely, Ronelle. No doubt. Absolutely. Things also, just to end off on the trends point of view, is things like seasonal businesses need to also be looked at. Very often what the insurance companies will look at, particularly on a short claim, if maybe they were only out for a month or 2, they'll only look at that period. So let me give you an example of a restaurant maybe that had an open area During summer months, their turnover was very high. The incident that they're claiming for happened to be in winter. So it's so important to look at the summer months, do a comparison of the right months against the right months in order to show exactly what turnover you would have made if not for the incident.
Yeah. May I just come in, because I did see a question, Ronelle, and the question was, but the onus would be very challenging, the words were, for the insured. I think we all got to understand the difference between presenting a claim to an insurance company on the basis of a balance of probabilities and beyond reasonable doubt. This is a civil, the civil test would apply. You've got to say, I'm going to present an argument, but not only an argument that I'm talking about, but I'm going to support that argument with facts and figures. What else is happening within the industry, a like industry to me? What are my budgeted figures saying? How did I arrive at those budgeted figures? What sort of factors are influencing us? And then we negotiate.
Yeah, if I may just add in also further to John's question, the insurance companies, and from my experience, they really are not looking to get out of the claim. They're not looking to reject the claim. They're not looking to repudiate the claim. Their payouts have been unbelievable, particularly SASHIA, particularly on the flood claims. They really are paying out, and they're not looking to mitigate the loss. They will pay out provided that you give the right support and proof to your claim. And John, just to answer your question, that provided that you can give the proof and you can give the evidence and you can back it up, they'd be very happy to pay the claim. The problem is that it's not being backed up. It's being left to the insurance company and the loss adjuster to put the claim together, and there's been no motivation. So I think it's such an important point to do, is to, again, I keep reiterating it, understand the business interruption claim, go to someone who knows what business interruption is, understands the business interruption, and sorry, Mark is just going to join me now. But just to understand the claim, know what goes in it, motivate it, and insurance companies will, gladly pay you provided that you can motivate it. Okay, I just want to move on to the next point, and that is that of savings. So don't just think that it's the loss of gross profit that one is going to be paid out on. And this has cost people dearly, and it's something that needs to be understood. How do savings work? What generally happens is that the insurance companies will look at the operating expenses prior to the incident against any operating expenses that would happen while the business is not running or partially running. And they'll do an analysis of that and see where savings could occur. The problems coming in, and we've seen this, is that a lot of the operating expenses prior to the incidents are once-off costs, and therefore would not have occurred in the incident itself. I'll hand over to Gary. Maybe you can give us just a good example of what that would be.
Yeah, no problem. So for example, with regards to, say, repairs and maintenance, if you did some kinds of repairs and maintenance prior to the event to an area that you would not normally spend money on, so it's a once-off event, and then during the indemnity period, after the event, when you're comparing that expense, you would need to actually exclude that amount because it's not a monthly expense, and therefore when you're looking at your savings, it's going to overinflate that savings because you're taking into account something that would not normally happen. And I mean, we see this all the time, and the problem is the information that they provide, it's usually management accounts and there's no breakdown information, and you have to then make assumptions based on what's been given, because you don't know what's going on in that business. So you have to ask those questions, but it's not always evident. Therefore, it can result in savings being overstated and negatively affecting the claim.
Yeah.
And
I
if
think
we
the
then, sorry, Michael, if I go to Steve's comment, he says, you have not mentioned inflation and logistical bottlenecks or of the rebuild. And he basically says, as the broker could be the ham in the sandwich, at the end, everybody blames the broker. And the key is to actually, as individuals, we need to and companies, we must make sure that we really own insurance and that is governed properly. Do you maybe have any comments on Steve's note that he had for us?
When we talk about mention inflation and logistics bottlenecks, ultimately, one would bring this into the claim, undoubtedly, because you're going to be looking at the actual losses actually incurred. But the point about the broker having unreasonable expectations from the broker, my view is that one should always engage with experts as best you possibly can. If the broker is not sufficiently expert to assist you, a good broker will bring in someone else who will be able to help you through this particular claim. And there may or may not be on your policy a claims preparation costs clause which would entitle you to claim. I do not want to actually stipulate that you should always believe that you're going to get this cover, but there is that cover available. But the message to take away from here is when there is a claim, after your policy is well prepared, that you engage with the right people to raise all the issues that you have at that particular time, and quite often to sit with the loss adjuster if you can, and make him fully appreciate the losses. If he is satisfied with that which you've actually explained to him, he's going to ask you for supporting documents, because he is going to attach that to his report, and he's going to have to present his report, and ultimately the insurer is going to say, is this a fair settlement based on the representations made and based on the supporting documents or not? And if he comes up with a settlement that's going to be lower and it's believed that it should be challenged, just be very careful on agreements of losses. What they actually state. I don't want to go further on this because I'm worried about the question session, going forward. So we've only got about 18 minutes. So I'm going to move out of the picture for a while.
Great. So the next point I just want to raise is something called increased cost of work here, and this is not understood at all by the insured. When an insured does have a business interruption claim, they have a duty to almost act like they're uninsured and to do everything in their power to mitigate their loss. So that means you can't just sit back and say, okay, we're out of business now. The insurance company will pay us for our loss of profits, and let's just sit back and come back in 6 months' time. You have to do everything in your power to do everything you can to try and generate turnover. So, for example, there was a furniture store in a mall. There was a fire in the mall. It couldn't trade. They were on the ground floor. They couldn't trade. So what did they do? They took a short-term lease on the second floor on a vacant in a vacant shop, and they continued trading as much as they could. What you can get now is the rental that was now charged on that short-term lease. The insurance company will pay that rental as part of what's called an increased cost of working. It's to the insurance company's benefit to try and mitigate the loss also and try and get revenue. I do just want to say that you can't obviously just bring in 10 workers and not do anything. It must be motivated, and you can't claim more than what profits you would have made as a result of the expense that you are claiming for.
So in other words, the expense incurred cannot be higher than the amount saved by the incurrence of that expense. There is another clause there that Brad will explain as well, called additional increase in cost of working. Do you want to explain that?
Yeah, absolutely. So as Michael mentioned, your increased cost of working, you spend R1 in order to save R1. I think would be the rule of thumb. Anything more than that would be additional increased cost of working, but that is cover that needs to be taken out. You do need to tell your broker, please, we do want additional increased costs of working in order for our business to continue operating.
Yeah, I do feel that we are getting a little bit technical on these particular terms, but it is important with throwing these examples, understand your policy before the incidents occur. Understand what you're entitled to, understand what you're going to get.
Yeah, and I think on that, of understanding the policy, don't just look at the policy schedule. So there's two documents that would normally govern, if that's the right word, an insurance policy. The one would be the policy schedule, which would be a summary of what cover he has. And typically, one would go to that document, see what cover we have and what extensions are included there. But it's so important, and I can't stress this enough, to really look at the second document also, which is called the policy wording, which must be read in conjunction. It may be the fine print, if I may call it that, in the definitions of what goes behind the policy schedule. But it's so important to read them, the policy schedule in conjunction with the policy wording. And I know Gary's got an example of the claim that we just looked at recently that highlights this. Gary, maybe you can just give us that example.
Yeah, no problem. So this company was a manufacturing company, and under the policy wording, there is an alternative clause which allows you to select output versus to almost replace the word turnover with output, which means that when you're assessing the claim, they can look at the output that the machines can produce versus just looking at the revenue. And the reason why this can create the difference is there might be a timing delay in terms of their production versus sales. So when we looked at this claim, it was done based on the turnover with the trends and using the trends and established what the loss in turnover would have been. But when we reanalyzed it and used the output basis, it resulted in the claim becoming much higher, with a difference in the reduction in turnover of about 5 million rand. And if you didn't go into that wording and utilize that clause, you wouldn't actually get paid out for as much as you should have.
Yeah.
Okay. Can I?
Very quickly, and I think maybe want to go to some questions sooner now. But just 2 important points very quickly. The one is interim payments. The insurance company has been unbelievable in paying out interim payments. They really, really have been. The problem is a lot of insureds haven't asked for it. So they're trying to get their business up and running as quickly as possible, but they're waiting for the building to be rebuilt. They're waiting for their stock claim. No, approach the insurance companies and ask for interim payments. They've been unbelievable at doing it, but people just haven't asked. Yeah. The next point we just want to raise, and this is probably what we've seen the most affecting flood claims, SASRIA claims, and that is the point of underinsurance and business interruption. Michael?
Now, very, very basically, I'm going to discuss what average is, because there are a lot of people that may not know it in this call. The way that average is applied is that the insurance are going to determine what sum insured they were exposed to, in fact, what the actual risk is relative to that which you have reflected on your policy. So I'm going to give you a simple example. If you are at home, you say that all my assets are worth 1 million, but you put a sum insured for 500,000. The insurance, because you'll never have a claim bigger than 500,000. The insurance company is going to say each claim that you have, because of your underinsurance, we're going to settle only 50% of it, being the actual sum that should have been declared and the sum that was declared. And they do it proportionate. And we've seen major claims here. A lot of guys not getting enough. A lot of them, like areas that we're looking at is, and I've seen this so many times. I've got a massive example where someone declared the gross profit. They say, we've only got 6 months indemnity period, therefore we're only going to give you a 6-month sum insured. You've got to give a minimum sum insured of a year. They suffer the loss. They say, but we were up and running, within 6 months. We've declared 6 months, but that's not how average works. You will only get a percentage of your claim. I was actually involved in a matter where a broker went all the way to court. Well, a case raised with him, and the attorneys actually claimed against the insurance company when it wasn't the insurance company's fault. It ultimately was the broker's fault. It is a massive claim. They were like 47.5 million rand short of their payments. They blamed the insurance company. The case went on for about 3 years. They then established it was the broker's fault. They lost, through prescription, their rights to claim against the broker. Average is important.
Yeah, I think for all the attendees, today, if there's one thing that we can leave you with, is please make sure that your sum insured, your amount that you are covered for business interruption, is calculated at the correct amount. And we've seen real tragic cases where, over the past few months, where people, they look at their policy, they look at the business interruption section, it says, yes, we've got cover, they sleep well at night, they go to bed at night thinking they've got the business interruption cover, they put in their business interruption claim only for the loss adjustment insurance company to give them an offer based on their underinsurance, and it's really, really affected people greatly. So please make sure that your sum insured under business interruption is the correct amount and is looked at on each renewal of the policy. What happens so often is business interruptions taken out 7 years ago, a figure's arrived at, and that figure is never adjusted as the business grows, would result in serious underinsurance.
Okay, Brad. I mean, that's good advice. Can we go to Andre's question? Andre said, please give your view if and under which circumstances would insurance have responded during COVID lockdown? Businesses were closed due to the pandemic with resultant loss in profits. Restaurants will probably have cover for health-related incidents to their customers as part of their policy, but manufacturing companies not so. Do you perhaps have a view on this?
Yeah, sorry, a particular view. So if I'm understanding the question correctly, it's we having a flood during COVID operations. Is that correct?
No, it's more about under which circumstances would insurance have responded during to COVID lockdowns. Is it business interruption? Andre, you can also clarify your answer again, but the way I understand the question is were people able to successfully claim during COVID for business interruption, for example?
Okay, when it came to COVID claims, it's a whole separate discussion if I went into the detail, but a lot of policies had a particular extension which was copied and pasted from one policy to the next. And in that extension, which was not reliant on material damage, was an extension that included shark attacks, suicides, shark scares, and infectious diseases. And infectious diseases was covered. I'm not going to go into the detail because it'll take me another hour, but essentially, if one did have that cover, and you were impacted during that particular period, the courts have actually held that you would be entitled to that cover. And you would have to be properly indemnified by the insurance company. Sorry, I am worried about time. I'm going to kill this one.
So, gentlemen, we've got about 5 minutes left. My takeaway from what you have said is that insurance is a very technical business, but it doesn't mean that you must stay away from it. So my point number one I've made is really important to take control of your own risk management. One of those elements is insurance, and then you need to really kind of make sure that you understand what it is you have or don't have or should have. And if there's a claim, you really need to take control of that. That might mean that you need experts at that stage as well. You need to really communicate. So the way that I took from what your conversation were was that if there is a claim, you need to get involved to provide as much information as possible. When there's averages, you need to make sure that it's a year, otherwise you're going to lose out. You must make sure you're not underinsured, and that's even at the insurance stage when when you're assessing what should be assured. And then to review this often. And then I've got there that you really need to engage experts if you don't feel that you are equipped to handle it, and you definitely have made it clear to me that I need an expert. So to understand upfront and during, after the claim, and probably at the review stage, that you have the right things. And then you mentioned something about, you mentioned your contracts. You're engaging with clients, with other people, and they're referring often to the insurance you should have in place, and to make sure that your insurance and whatever you into agreements downstream to your supplier should be there. Have I summarized it correctly? Is there anything else that you think someone like me should take away?
Yeah, I'll just quickly jump in on the contract stage. Very often people don't understand what risk is actually transferred. So in a contract, they'll say, you take on this risk, I'm going to disclaim this risk, etc. But then there is an insurance clause. But the insurance clause written by attorneys doesn't actually cater for the exposure that is written into the contract itself. So they might say you must have public liability insurance because they think that's enough. But meanwhile, the issue is not public liability, it's professional indemnity insurance, or it's directors and officers liability insurance, or something of that nature. You're also getting a lot of these contracts where you're disclaiming the risk, but then you want to claim. You're killing an essential element. And we've just been consulted on a matter where someone has actually thought that they were very, very clever, and they made a handwritten change to a contract, transferring the risk back to the client, then trying to claim after the incident. And it's not going to be paid because legally you're no longer liable. There are many issues, and we're saying that before you actually enter into any tender, into new business, look at the contract, understand the risks, and ensure that you're properly covered, that the risks identified are in alignment with the cover that you have.
Yes, and if you don't understand the cover in the first place, you can't check that it's in line. And then that brings me back to a circle I drew for myself, was engage the experts, which is maybe you guys, right? Definitely you guys. Okay, so to wrap up, from a corporate governance perspective, we, from a director's perspective, from a board perspective, from someone who delivers papers to boards, if you're a company secretary, if you're an executive, what will be necessary is for you to ensure that you make your board aware of what insurance is in place, and in which cases we would be able, or a company would be protected. I don't know if you've got a last comment for me on that one.
Yeah, no, absolutely. I mean, I couldn't agree with you more, unless I really try.
Okay. No, okay. Oh, sorry, Michael, I didn't mean to cut you off. Sorry.
No, I was kidding. Carry on.
Okay. So, the last minute, I want to say to everyone, thank you very much for attending. We will send out the slides to everybody. If you want to touch base with, the team, you're welcome to contact them directly. And then next time, on the 6th of October, we are going to have our third In Conversation With. We are talking about governance in the metaverse. If you don't know what the metaverse is, join us. If you do know what the metaverse is, join us. And then it's with a crowd called Immersive. They're a very interesting company, 100% female, have done a lot of work in Africa. And in fact, you'll be very surprised how ahead of the time Africa is when it comes to the metaverse and with virtual reality and all of that stuff. Then on the 3rd of November, we will be in the last conversation for this year with international guest speakers from the UK, from the team from GWCI. They will share their insights on third-party relationships and how this will impact a business from all aspects, especially reputation management. So from us to our Hertzberg team, and Salant team, Hertzberg and Salant Attorneys. Thank you very much, gentlemen, for joining me today, for sharing your insight. I can hear you can go on about this for days and days, and we will definitely chat further. Thanks so much.
Thank you very much. Thank you.